So we have to discuss SoFi stock, and more specifically, taking some profits or even taking all your money off the table. We are up over 300% since our buying spree in the $9 range in April, and that, my friends, is several years worth of gains in just 1 year. So it's kind of prudent to take money off the table, right? Well, let's discuss that topic in depth today, and I'll tell you my exact plan for SoFi stock and what I'm doing right after you like the video if you like getting the truth out the hype, because that is exactly what you're going to get today, guys. We're going to talk about the truth. Some of you guys may be happy, may not be happy. That's okay. It's all we can do is our best here to give you guys the truth. So there are a lot of you guys up there that are up massively on SoFi. I know for about 3 years straight now, I have bought SoFi repeatedly over and over and over again. I mean, literally, guys, hundreds of buys, with most of those being under $10. Actually, most of them probably under $9 or so. And even this year, you got that opportunity to buy at those prices, which if you want to see my buys in real time, the Fall Frenzy sale is live and limited if you want to see those buys like SoFi under $10 on repeat. Maybe Google at $150 just a few months ago. We were buying that one on repeat too there, it seemed like forever. But we'll talk more about that at the end. It's the pinned comment for those of you guys interested. But let's talk about selling SoFi now. Now remember, I'm coming at this from a long-term buy and hold investor's perspective. That's all that I'm coming at from. Maybe if you're talking about swing trading or something else of that nature, or day trade, something totally different. It's not what I'm talking about here today at all. So if you're going to try to apply it to that, sorry, it just doesn't apply there. So let's talk about the 4 key points to this discussion and the 2 scenarios where I would sell. And then I'll give you the answer on what I'm doing specifically with SoFi stock. So point number 1 is taking profits or trimming is a trader's move. I know it's a hot take right there. It seems like right now, everybody always says, oh, there's nothing wrong with taking a profit. Nobody's ever lost money taking a profit. Nobody's ever lost money trimming. And while that might very well be true, there have been fortunes missed out on by doing those same exact things. Now, I'm not saying that they're wrong. I'm not saying that any of those strategies are wrong. That's not what I'm saying at all. But to say you're doing that, but you're not really trading is also not true either. And the vast majority of folks are not using a trading plan at all. They're just simply going, well, I feel like it's ran up a whole lot, so therefore I'm going to take some profits off the table. It's all based on feelings and emotions, not based upon fundamental investing. And remember, I'm talking about a long-term buy and hold investor's perspective here. You're going to regret, if it's a great company over the next 20 years, you will regret every single share that you have sold. And it is 100% fool's gold, guys, if you think you're going to sell and then, oh, it's going to dip down, then I'm going to buy the dip and I'm going to be okay. All that trash that is all the rage right now. And oh, by the way, it's kind of working right now too. It's kind of the problem with a hot market. Ask everybody how that worked out in 2021 using that same exact strategy overall. At some point in time, it didn't work. And now there's a lot of folks who missed out on great stocks with really low averages because they were busy playing those games. And then when it didn't work, they ran and they went away. Or they were playing those games all the way through the entire dip and all the way up. And then all of a sudden a stock like Palantir takes off, for example, or maybe SoFi takes off, as an example. Well, if you would have just added the entire 3-year, 4-year period there, you'd have a lot of shares at that higher price, right? I don't know about you guys, but whenever a stock goes on a run like Palantir, man, the only thing you're saying is, I wish I would have bought more. Well, guess what? If you were trimming along the way and taking your profits along the way like you were supposed to at $15, then at $30, then at $40, then at $50, you probably regret every single share that you sold of Palantir. And more importantly, it was almost impossible to buy up all those shares that you sold and, we're going to take your profits on and all that good stuff. Statistically, guys, not Luke's opinion, not, Luke's thoughts, not even Luke's studies. Wall Street's studies show you that buying and holding outperforms trading, trimming, taking profits, or any other strategy out there. And it's not even close, guys. So it's not Luke's opinion. That's what the actual data says. That's why I don't play those games. Number 2, what was your plan? Now this right here ties right into number 1 perfectly. What was your plan for the stock? A lot of folks, this is a long-term hold. I'm going to hold on this stock for the next 10 years, 20 years, as long as they continue to perform underneath. I'm going to continue to hold this stock and add on the dips. That right there was your plan. Why in the world are we discussing selling or taking profits or anything else? Now, maybe it was a trade to begin with, right? A lot of you guys maybe jumped in at 9, just thought, hey, SoFi is going to go up on a run here. Whenever it gets up over, $25, I'm going to take my profits. That makes perfect sense to me. That was your plan. That is how you appropriately execute a trade. But for a lot of folks, they have a long-term hold on and they want to hold SoFi forever. And they got, they were buying shares in the $4 and $5 range. And all of a sudden it pops up over 15, gets up over 20. And they start going, man, I need to take some profits. I need to lock in some gains, some other things of that nature. Now all of a sudden a long-term hold turns into a trade, whether they know it or not. And of course, if you're telling me, well, I'm just going to buy it back later whenever it inevitably falls back down, that's trading, guys. That's not long-term buy and hold investing. It's okay. It's not wrong, but go with a trading plan. Create that plan and then stick to it. It is amazing to me how many folks jump off that plan whenever the stock has a little bit of a run in it, or maybe even a good run in it. We'll talk about reasons and ways that I would sell here in just a second here. It's coming, guys. But in this particular scenario, you are deviating from your plan, which is okay, but what is your new plan? And be willing to acknowledge that it's a trading plan, not a long-term buy and hold plan. And make sure you kind of keep those separated so that way, the moment you start mixing it all together, it just kind of becomes a jumbled mess in your investing. And what happens is you inevitably will underperform over the long run. Number 3, the right time to take profits usually means you left a fortune on the table. When folks go on CNBC, here on YouTube, on social media and everything else, they start talking about taking profits. The vast majority of those folks are traders. And that's okay. There's nothing wrong with that. But when they start talking about the right time to start taking some profits, they're talking about the trade. And unfortunately, the right time to take your profits usually means you left a fortune on the table, right? Because the right time to take profits on this particular run was probably in the $20 range or so, which means you left a lot of money on the table as it continued to run, right? The right time to take profits in Palantir legitimately was in the $30 range or so. All the charts, all the graphs, all the technical analysis, all of it pointed to a massive pullback, not this ridiculous run that we've been on. So if you decided to take your profits and you did the right thing, you took the profits at the right time, you missed out on a fortune on the other end. And I'm not even talking about long-term here. That's something that happened over the course of a year, actually less than a year, right? That's totally different than something like my Apple, where I took a $600 profit and it cost me 7 figures later on. There was no way I was going to trade my way there or anything else that they're saying, oh yeah, you absolutely could get in and out and all other stuff like that. That's all fool's gold, guys. You guys know that. That right there is we're keeping that trading plan separate from your long-term buy and hold investing plan is so key, because the right time to take profits has nothing to do with fundamentals, valuation, or anything else. I think about Meta, right? Hey, it goes from 80 to 160. Probably the right time to take profits somewhere along the way there, right? Now, here we are way, way, way higher than that now. The right time to take profits as a trader makes perfect sense. Buy and hold long-term investor doesn't make any sense, because you're going to leave a fortune on the table over and over and over again. Sooner or later, it's going to happen. Which leads me perfectly to number 4. The percent you're up has nothing to do with valuation. I see this one all the time, and it's a huge, and Wall Street's the worst about it. They're just like, oh, this stock's up 100% this year. Man, you really got to start, wondering whether or not it's the run's over with. Can the rally continue? Maybe it's time to take some profits. All kinds of stuff like that. It's nothing to do with anything, right? Meta down at 80 doubles up, right? 100% run, still at 160. It's still significantly undervalued. Doubles up again at 320, still significantly undervalued at the time. So the percent you're up has nothing to do with valuation. Do not conflate those two. I do not look and see what I'm up percentage-wise. I do not look and see over the last, 20, 30, 40 days, last 3 months, 6 months, whatever the case is, how much is it up? I don't care. I care about the valuation today and the pricing that I'm getting today and my plan and everything else involved. That's it. The percent you're up, or the percent the stock is up, year to date, or whatever the case is, all those pretty charts and graphs everybody likes to throw out there, means nothing. What matters is valuation, and you have to understand that piece. That's what matters. The percent you're up, completely irrelevant. Ignore it. That's something I never look at. But there are 2 scenarios where I would consider selling a big gainer like we gotten right now in SoFi. So let's talk about those next. The first one, it was a low conviction play, or the stock gets caught up in a hype run. So obviously when you have a stock that goes on a big run, if it happens to be a low conviction play, maybe a stock you were kind of thinking of getting rid of anyways, maybe it doesn't fit your plan right, maybe it doesn't align with your goals like you thought it did. Maybe you just have lost a little bit of confidence in management a little bit, whatever the case is there, it doesn't matter. The point being, it's a lower conviction play now. It's gone on a big run. Owning that stock is just simply going to create worry and problems and emotions in your investing, and you want to get rid of that, right? You don't want that. And so it goes on a big run. All right, I might very well consider selling that right there. Obviously, if a stock gets caught up in a Wall Street bets type of run to where it just pulls years into the future, right? At that stage, I definitely consider selling a stock all the way around, because, hey, it's pulled too much of the future forward. That was my mistake in 2021. I knew not to buy Tesla at 400. Right? I knew to stay way far away from it. Even at 300, I knew to stay way far away from it. But what I didn't do was, it got so crazy overvalued at that stage, probably should have sold, because it was trading at more than 1,000 PE. It was ridiculous. I knew it was going to trade flat or down for years. And that is exactly how it's played out. We're just now back to those levels right now. So, very, very, very crazy, kind of a one-off type scenario. to where, yeah, I would consider selling at that stage. And number two, something fundamentally changed with the stock. Now, this one right here is the big one for most of our companies, what we're looking at, right? Something fundamentally changes. Stock price is not a fundamental change, guys. I'm sorry, it's just not. However, there being a new regulation that comes out that severely hinders the business or hurts the business, or maybe what they sell is now illegal, right? That's a big fundamental change. Management teams leaving, depending upon who it is and who they replace them with, that right there can be a significant fundamental change with the stock. Now, there's not a one rule, hey, CEO change, get out. Everybody tries to apply rules to everything. You have to treat each individual situation differently. A fundamental change in one company does not have near the impact that a fundamental change in another company does. So there's a lot of nuance within all of that, but I think we can all agree there's a fundamental shift. Maybe there's just a new technology that comes out that just makes their technology obsolete, right? All of a sudden, everything moves online and nobody's buying anything in person, and all of a sudden it's a brick and mortar business and they never made the transition to online. That right there could very well be a fundamental change. There's a lot of different situations where that right there can happen outside of the obvious ones like fraud and things of that nature. That's easy. But, there's a lot of other things that you've just got to sit down and assess them all individually. However, when there is a fundamental change and it's not for the better, sometimes fundamental changes can be for the better, right? It can actually increase valuation. It can actually make it better. But in a lot of cases, it's the negative one. We're talking about selling right now. If there's a negative fundamental change and I feel like it's going to impact the business enough and they won't be able to navigate around that problem, then at that stage, that's absolutely when I would consider selling. So let's talk about my plan with SoFi. Am I consider selling or anything else of that nature? Now, for me, this is just me. It is a long-term hold. That right there is what I feel SoFi is. It's a stock that I identified a great management team, a great product, great execution. I loved it. And therefore, for me, it's a long-term hold. I have no interest in really selling right now. It's not a trade. It's not anything else for me. And looking at the business, nothing has fundamentally changed at all with this business. Yes, the stock prices run up, but nothing has fundamentally changed. And it's also not caught up in a Wall Street bets type of run yet, right? It has had a big run, don't get me wrong. Definitely on the higher end of that, valuation scale, right? I don't think there's anybody saying, oh, SoFi is undervalued. Of course, the people that have, $200 price targets and stupid crap like that, of course, they're like, oh, buy it all you can right now. Okay, maybe not. If you're DCAing, just continue to DCA into the stock. But it's definitely not caught up in any sort of Wall Street bets type of run right now. And I personally think guidance will be adjusted significantly up, making the valuation not too crazy here in the very near future if we don't get it on this earnings. Basically, whenever we get the annual guidance and all those sort of things that'll come out right there at the beginning of the year, that right there is when I think they will adjust it, and they will adjust it significantly. And more importantly, it's probably still sandbag because it's exactly what this management team does. So no, I am not selling any shares of SoFi whatsoever. Matter of fact, I'll be looking to add shares on the weakness. And if you want to see those ads in real time, you want to learn how to do evaluation, you want to be able to set price targets, be able to buy stocks like this repeatedly under $10. I have a great plan to be a great long-term investor, learn all the different tools through coaching, through free courses, through everything else offered. The Fall Frenzy sale is live right now. Check it out. It's the pinned comment down there. See if a membership's right for you. Get all that. Guys, there's so much involved in the group. I can't even mention it all here on the videos. Just check it out. See if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.